to another hashtag Finance Friday. And this month we are talking all about financial risk management, because this is something that as business owners, we need to actually focus on, right? Dealing with uncertainty, dealing with adrenaline junkies. Sometimes we have to do that in our business as well. So I'm very excited to be interviewing Wynand Du Toit today. He is the founder of UPvisor. He's an independent financial advisor, as he likes to point out. So Wynand, thank you so much for joining us today. Please go ahead, introduce yourself the way that you like to be introduced.
Hi there. So yes, I'm Wynand Du Toit. I run a small financial planning business called UPvisor. And we've been in business since about 2013. I think we'd slot into the small business enterprise. So, with a lot of our clients, we find that we face the same challenges, and we are able to pick up solutions to some of the issues, at least, as we carry on.
Okay, so some of the issues are better than none of the issues, right? I like that.
Yes.
Okay, well, tell us a little bit more, in your experience, what are the types of risk that small business owners are generally unaware of? Because as I said just now, I think we sometimes decide, okay, cool, we're going to start this business and it's going to be all fun and games without actually recognizing that there are some risks associated with it. So based on what you've seen, what do we need to remember?
Okay, so what we've seen is that some people were born to be business owners or entrepreneurs, and some people are sort of forced into that position due to possibly retrenchment or forced early retirement, and they're not quite ready for it yet. So I think one of the most obvious risks is just an inability to actually operate in a business or to know exactly how to run a business. And I think that's why it's important to get as much information and coaching and guidance as you possibly can get. What we're seeing that with most small businesses, as like with us, the business owner doesn't mean you're just sitting in a chair and looking at things happening. You often are the butcher, the baker, candlestick maker. You do everything. And what we sometimes forget is that, if something happens to you as a person, if you have an illness or injury, that can seriously affect your ability to continue to serve clients. It can have a major cash flow effect down the line. So that's definitely something to assess. I don't think it's the same for each and every business, but that is definitely something to look at. Are your insurances up to date? Is it structured? Because as a business owner, there are lots of things that you can do that are different from what an employee can do. So you can structure your affairs in a way that will give you and your business the optimal protection.
One of the areas that I've realized that I sometimes miss out on is exactly what you mentioned now. It's about what happens if I can't work, right? And needing some sort of income protection that we need to take into account. And I think this is something we often miss out on. But before or maybe part of this question, won't you just tell us a little bit about the types of risk planning or management that we need to look at as a business owner? Like, what are the key areas that we need to make sure that we have covered? So it could be the income protection. It could be what happens when you retire, because as an employee, as you've said, there's specific things that are normally in place automatically for us for retirement, but not as much from a business perspective or as a business owner. So what are some of those things that we need to look at?
So that's quite a nice broad question.
Yeah, go for it.
So my thinking is that business succession is the starting point. So is there a business succession plan in place? Is your business the kind of business that could continue without you? So in other words, if you retire one day from the business, would you be able to sell it to someone else, and would they be able to drive it as well as you? If you passed away, would you be able to leave that business to a spouse or a child, and would they be able to continue or even willing to continue? And in some cases, businesses just don't lend themselves to being that sort of enterprise. If you're a surgeon, for example, you could be a business owner. But if the person who wants to buy your business isn't the surgeon and isn't as good as you are, then maybe that won't work.
You don't want a candlestick maker buying your surgery.
No.
Right.
That wouldn't work at all, and we're very fortunate to work with some very specialized clients doing some very special stuff that no one else could do. And that's a really big conundrum. What do we do with this business if you're no longer around? So bringing that back to sort of the immediate steps that we can take and the risk planning that we can do. Back in the day, maybe 15, 20 years ago, you had to go and work out what your monthly income would be that you would miss out on if you were permanently disabled. And you would have to multiply that and come up with some massive amount of money and take that out as a disability lump sum cover, which would only pay if you were permanently disabled.
Sure.
So if you were temporarily out of action, that wouldn't really work for you. So fortunately, our industry, moves forward quite rapidly. And we now have things like, income protection type cover, business overheads protection. And in short, as a business owner, 9 out of 10 times you're able to say, you know what, if I couldn't work for the next 1 or 2 weeks or 2 months or 3 months, a certain kind of policy would be able to cover my income. And another portion of that would cover the overheads of the business, as in rent, salaries, and certain overheads that we might not be able to carry if we weren't actually there to run the show.
Yeah.
And that's actually quite straightforward. We look at the numbers and we look at the different providers and what works the best. And that's an easy fix. So in terms of the risks, and we've seen real life claims happening on this.
Sure.
So we know it works.
I like that. Maybe I want to just go down the road of COVID quickly, because I think during COVID, there was a lot of talk about how much can I claim from insurance? Can I claim from insurance at all? Don't you want to just address that? And in Port Elizabeth, we are potentially considering going back into hard lockdown just because of the infections again. So is there some sort of protection that we have from an insurance side that we can look at in case that happens?
So this is an ongoing issue currently, where a lot of business owners have taken out a type of business interruption cover that would pay an amount of money to the business if that business was interrupted from performing its normal duties or operations due to some sort of event or nature event, etc. So we've seen a lot of pushing and pulling between the business owners and the insurers, and we're not entirely sure what the outcome of that would be, but that is a separate kind of cover that can be taken out. We have had clients inquire with us, for instance, on their income protection or their overhead cover, whether having a lockdown would enable them to claim. And unfortunately, on those types of products, it doesn't. So you physically, if you had COVID, if you had been diagnosed with COVID and you had to stay home for 2 weeks or more, then that would be a claim. Or if you were ill or injured. But I think what you've just referred to would be business interruption cover, which is a separate issue.
Okay. Well, I think it's good to know about, right? Because even if it doesn't work for COVID, there are other things that could interrupt your business. And I've found that a lot of businesses are not well prepared to deal with business interruption or business continuity, if you look at it from the other perspective. So whether you have somewhere that you can go set up shop to go work from in case of fire, where all of your staff members can go there, something like that, So I think it's something that's really crucial to make sure that your operations can continue as long as possible without interruption.
Yes. So one of the things that we've definitely seen with this lockdown was what types of businesses can continue remotely and which businesses absolutely need a site, like a manufacturing plant. You can't do that from home. Not as far as I know.
I guess it depends, right? If I look at all of the people that started making random types of beer, pineapple beer, you can do some sort of manufacturing at home.
The pineapple beer industry boomed.
That's true. Okay, well, talk to us a little bit about how we can structure our portfolios in such a way that we are getting a tax benefit potentially or some tax savings, if you look at it from a retirement perspective. So, I mean, we know that there's some sort of tax benefit coming through from our retirement annuity, but talk to us about the options that we've got.
Okay, so and this answer could vary a bit depending on the size of your business, the amount of shareholders, and what your end goals are. But I would think that in a smaller business, your first decision, once you're on the go, would be to choose your battlefield. Decide where you want to pay tax at. Do you want to pay tax on the profit of your business at the business rate? Or would you prefer to pay the tax in your own capacity, where you've got a sliding scale? So I've got a horror story with a client I spoke to 3 months ago. He complained to me that he had to pay quite a lot of provisional tax, as in they were making a profit, or it seemed like they were making a profit, but he hadn't taken a salary for 8 months. How dare you? You know, you should take a salary.
Yeah.
Rather, you know, pay some salary tax and have no profit. So if you're looking to sell your business in the near future, and it's really crucial that you show this amazing profit, then, you know, maybe that's what you would want to do.
Yeah.
But what we've seen a lot of business owners doing, especially now that, and I like to think of them as retirement accounts. Retirement annuities often have this negative connotation where you have to commit to a single premium or a contribution and you can never get out of it, and it's just nasty.
Yeah.
There are such fantastic sort of new products available where you can structure things exactly the way you want to. So in short, if you had a 100,000 Rand profit in your business and you knew this in February, you could choose to pay the 28,000 in income tax,
Right.
or you could decide to pay this 100,000 out to yourself as a bonus.
Woohoo! Bonus.
I mean, yes, you would then be taxed on it, but you could go and spend the money.
Right.
Or you could decide to take this money quietly off the table and put it into a secret pot where it's protected against creditors. It can be invested and you can use it towards your retirement.
Sure.
And if you did that, that bonus would be taxable, but it would be immediately tax deductible. So you've just managed to take the entire 100,000 Rand in profit and put it away for your future.
Sure.
And we feel that that is quite a nice way of doing things. It's a bit more clever, and you wouldn't have to commit to X amount per month, because as we know, I think we've all been through our first worldwide pandemic this year. No one knows what's around the next corner. No one knows what cash flow is going to be like 3 or 4 months from now. So whatever we try to do, we try and do it in a way that you have to make the least amount of firm financial commitment.
Right.
So if you need to put away X amount of money per month, that's fine. But if you need to stop at some stage, there mustn't be this issue of, oh, but what about penalties and this and that? And then this whole thing is locked up. That's no good. Yeah.
I like that. I think that's really good advice, Wynand. And one of the things that I've been going to and fro with a little bit is this whole idea of doing a monthly payment versus doing a top-up payment at the end of the year. And when I was chatting to my financial advisor, who is not an independent financial advisor, but when we were having this discussion, he suggested that if I'm investing on a monthly basis, the impact of when I'm actually investing is, it's not quite as risky, because you could be investing in a really good month or in a really bad month, but overall, actually, it equals out. Versus if you do the top-up payment at the end of the year, then you do have to be a little bit more mindful about when you're actually doing that and what's happening in the market. So I think it's good for us to start looking at both options, right? Where you have some sort of a flat risk profile, I guess that's the right word, if you're doing it on a monthly, but almost do like the minimum that you could potentially afford and then make the top-up payment at the end of the year. What are your thoughts on that?
You're absolutely right. So what you're talking about is Rand cost averaging. So if we put money into an investment on a specific time of month, some months we're going to be buying high, some months we'll be buying low, which is fine. And we are absolutely for that. So if we prepare a plan for a client and the answer is you need to save X amount of money per month, what we have found is that if we use the kind of investment accounts that you can stop and start as you please, and the client knows that, they are more likely to commit to saving that larger amount, because they know that in 2 or 3 months' time, if things aren't working out, they can stop it and they can pick it up again later. And we've had quite a lot of this with COVID. So we've had a lot of clients where we've just paused their contributions, and a lot of them have started, reigniting those and cooking with that going forward. So I think with a small business owner, it's a case of what can you comfortably afford to put away every month, and preferably, if possible, to put that money through your payroll. Because the moment you put your contributions through your payroll, you actually receive your tax benefit immediately.
Yes.
As opposed to, think about this, you could have made a retirement annuity contribution on the 1st of March, 2019, looking forward to submitting your tax return and getting that nice cash back from SARS in June, which was postponed to September.
Sure.
And you may now just be getting that money back. So in other words, SARS was sitting with your money for 1.5 years. Whereas if you had just put it through your payroll, you could be paying less tax that very month.
Yeah, that's good. That's good. I like that.
So what we're doing with a lot of business owners is they have their regular monthly contributions. If they have a big month, they might want to put some additional money in. And when we get to the end of the tax year, we do an assessment and we say, well, you know what, you've still got some room. You can make an ad hoc contribution if you want to.
Yeah.
And we can still run that through the payroll. So they come out even Stevens with SARS even before the tax deadline.
Awesome. Yeah, that's so good. And just for our listeners, I would like to refer you back to the session that we did with Veronique Verlander, where we spoke about the difference between a sole prop versus a company. Because if you're wanting to put something through the payroll, you need to be a company, right? You can't really do that as a sole prop. So I just want to refer you back to that one. And then also the subsequent one we did, the follow-up one we did was about small business corporations tax. And that is really where you can get a little bit more tax benefit, even over and above what Wynand has already mentioned. So just want to refer you back to those. Go check them out.
Yes, yes.
Cool. Wynand, any closing thoughts that you would like to share with our listeners? It's been really interesting chatting to you.
Fantastic. Thank you so much. So yes, I think, embarking on a journey of being a business owner, whether it's voluntary or forced, can be very exciting. It can be very rewarding. And I don't think it's the same for any two people. What I could say is make sure that you've got a team around you, of proper people that can advise you, that are trusted. I think trust is the big thing. So whether it's a trusted accountant or a financial advisor or a legal person, just make sure you surround yourself with people who have your best interest at heart.
I like that. Thank you so much, Wynand. Please tell our listeners where they would be able to find you online if they want to book an appointment with you to review their portfolio or anything like that. Go ahead.
Awesome. So our website is privateadvisor.co.za. So that's advisor with an OR at the end. And they'll be able to request a meeting or just a quick chat. And we're happy to take things from there.
Awesome. Cool. Thank you so much, Wynand. Really a pleasure chatting to you guys. And don't forget, this month we are talking about financial risk management, and we are specifically diving deep into this concept during our training academy this month. So sign up for our session happening next week, Wednesday, from 8 until 9 o'clock, which is the content session. And then 2 weeks later, we will be chatting through your specific questions and applying it to your business. So if you're wanting to unpack what risk is, how this applies to your business, and how you can actually manage it, make sure you're signing up for R400 per month. If you sign up in November. So until next week, Friday, same time, same place, we will be chatting #Finance Friday again. Until then, bye-bye.